So economists tell us that we're in a K-shaped economy with a certain number of people above in the upper section of the K and a bunch of people in the lower section of the K. The question is, are we really? Second of all, if we are, what are the opportunities for business owners and investors in the K-shaped economy? And third, what are the dangers of the K-shaped economy? And we have an expert on this topic, Dr. Ben Keene. And Ben, you've done a lot of studying on the K-shaped economy and actually done a lot of writing on it. First of all, would you tell us a little of your background, and then why don't you give us a little explanation of what it means, the K-shaped economy?
All right, so I've been a macroeconomist for nearly 25 years, graduated at the University of Virginia, and have been primarily in university, but have been in and out working as a consulting, visiting scholar, and employee with different Federal Reserve banks. So that's a little bit of my background. In terms of the K-shaped economy, it's just the general idea that there are certain people that are doing well in the economy, and there are certain people that are, or groups of people that are not doing well.
And so, not a lot in between, right? So the middle class seems to have either moved upwards or downwards, is what you're saying. Interesting. So, okay, so first question is, what's the shape of that K? In other words, is it a little bit that's in the upper and a whole lot down below? Or is it, is it 20% that's above? Is it 50% that's above? I mean, where's that cutoff?
So I don't have specific numbers, but the way I like to think about it this way is if your income is primarily driven through labor, through wages, we know that real wages have been fairly stagnant over the last number of years, especially real wages, given the amount of inflation that we've seen over the last, say, 6 years. Whereas if you own stock or you own businesses, you're getting non-labor income from those types of sources, you're doing much better. And if we look at the performance of the stock market, say over the last number of years, we're seeing a number of good years mixed in with a couple of bad years. And that's really driving income of people who have equity ownership. And so those people are at the top of the K.
So the haves are having more and the have-nots are having less. Now, are they truly having less, or is just, so one of the questions I have for you is, because it depends on who you talk to, right? On what the numbers look like. But there are economists that would say, say from the Hoover Institute, that would say that, hey, everybody's come up. It's just that some have come up a lot more than everybody else. And so there's a bigger disparity, but even those in the lower part of the K are better off than they were 20 years ago. What do you say to that?
I think that's a fair assessment. When you look over a 20-year period and you look at average weekly wages going up. But what we've seen here is we had a big spike around COVID. That number came back down, and then it's slowly been inching its way back up, but not at a very fast rate, not compared to what we're seeing growth in, say, revenue from businesses, from revenue from, say, stocks that people are earning.
So this is the first, we haven't talked about K-shaped economies except in recent years. What would you expect a normal economy to look like in the US?
Right. We would expect wages to grow roughly in line with corporate profits, with revenues from businesses. We just haven't seen that numbers really lagged. It's growing, but it's not growing as fast. Okay, so the disparity is getting bigger. I would say that's a fair assessment.
Okay, and so that's really what we're talking about. So I was reading an article just this morning in the Wall Street Journal about a pawn shop business in Nevada, and they were talking about the K-shaped economy, and they said, so this pawn shop actually has they have two different brands. They have one brand that is for the upper income, and they actually sell Hermes bags and, they sell their high-end stuff there. And then they have the other pawn shop, which is for the lower end, which is, the the $200 loans, et cetera. So that's an example of a business actually take advantage of the K-shaped economy where they're not giving up on the lower end. They realize that that's their bread and butter, but they are taking advantage of that upper end because there's some argument that people on the upper end are actually willing to spend more than they used to be able to spend, and it's actually pushing up profits.
I think that's a fair assessment. I mean, you're trying to hit both sets of the markets. I mean, many businesses have different brand names that cater to lower and middle income consumers, and then some that cater to higher income consumers.
Yeah, I guess this started with the auto manufacturers, right?
Yes.
We had Cadillac and we have Chevy, right? I
Yeah.
mean, that's a really good example, right, of that. And you take Toyota, their some of their luxury cars, Lexuses, are built on the same line as the Toyota, and so they're essentially the same car, but they cost a lot more money. So, what are you seeing as far as what's driving consumer behavior right now from this economy?
Well, I think when you're talking about on the lower end consumer, energy prices have been a big hit. Right. This is with the spike that we had in energy prices. Now we're starting to see WTI come down. This morning, as we're taping this, it was trading just below 70. So we will see gasoline come down. That's going to be a relief. There was some benefit that hit earlier in the spring from the tax cuts on overtime, and those additional tax cuts that were geared toward the middle and lower middle class. So we have those benefits that were in the system, but that part of the economy's been suffering because they rely more on things that such as energy. That's a bigger portion of their budget, and that went up higher. Food's a bigger portion of their budget. Again, when those things increase, and we've seen those things increase, they feel the bigger the brunt on it, given the fact that also their wages haven't gone up as much.
Now, on the flip side of that, rents have come down over the last few years. Okay, those of us who in the real estate industry know just how much they've come down because there have been a lot of real estate actually change hands, going back to the banks now. It's really been struggling, the multifamily. So they have not felt that as an offset.
I'm sure that's been an offset, but remember also that is a sticky component. Right? Those they do come down, but they come down slowly, in part because people are tied in with leases, and that's going to take a number of months for that to happen, for it to come down.
Okay, so I want to shift gears for a minute here, and talk about the macro effects of a K-shaped economy and the political effects, because it would seem to me that there's a logical conclusion to be drawn from a K-shaped economy and the Democratic Socialists of America, and them winning in elections, starting with Mondami. Now we have we have Colorado even. So it's not just the coast, but now they're starting to gain some traction in the middle of the country. What do you see that way as far as how the economy affects the politics?
Well, historically, people have voted with their pocketbooks. And so if their pocketbooks feel challenged, they'll vote. And the more vote in a certain direction. The more challenged their pocketbooks are, the more willing they're to accept a more extreme form of politics. And we can see that throughout history.
So, okay. So where do you see this going? I mean, do you see this getting better? Is it exacerbating? What do you think is going to happen over the next few years? What do you see?
In terms of the politics, in terms of the Democratic Socialist?
Well, in terms of the politics, because of what's happening in the economy.
Well, I think it's fair to say that the Democratic Socialists feel like they're making progress in establishing themselves, at least as a force within the Democratic Party. And that, I think, is their objective right now, to do that, so they're trying to win primaries. Like you said, they've done it in Colorado. There's an interesting Senate race in Michigan, which is something similar. So they're trying to, some have described it as the Democrats' version of MAGA in terms of their party.
Sure. No, clearly it is, and it's certainly an extreme. What do you see? So I don't know how you feel about socialism. Um, there are a lot of economics professors that think socialism is great. I love the quote, and I can't remember the author of it, who said that capitalism's the worst system we've ever had, except for every other system. And so, historically, we've never seen socialism work for very long. Certainly not extreme socialism like Soviet Union. I mean, it caused a lot of hardship, a lot more hardship than it caused positives in most people's view, from an economic standpoint. And so, where do you see this going? I mean, we've got a ballot measure in California, to have this billionaires tax. We just saw a millionaires tax passed in Washington, even though they're not supposed to be able to have an income tax. So that one's like, whoa, how does that pass constitutional muster in their state constitution? And then we have the Massachusetts tax, right? We now have the pied-à-terre tax in New York on the high end. So we're seeing actual taxes come out of this. Do you see this continuing? Is this what we're going to see for the foreseeable future?
Well, I mean, at a state level, you've also seen migration occur. So, for
Right.
example, California is on the verge of, in the 2030 census, potentially losing as much as 4 congressional seats. So we're seeing migration to places like Texas and Florida where there's no state income tax. So on the state level, avoidance is easily done by moving.
Right.
Now the question is does that happen on the national level? And that's really a matter of what happens politically over the next 2 years in this country. I don't think it's a foregone conclusion that it will happen, but I also don't think it's an impossibility that it will happen. So I think political issues and what defines an election has yet to be determined.
I guess what I'm getting to is I've seen, so I write about this stuff all the time, being a tax guy. And I think that there's a danger to the people in the upper part of the K, if they get too far out, because that's when you get revolution. That's when you get uprisings. And it seems to me like the Democratic Socialists are really, they're almost a canary in the coal mine of, hey, it's best to pay attention and not let this get out of control. And so maybe you have to do something, but then the question comes, what do you do?
No, I think that there's definitely something to be said there, that it's important that things don't get too out of whack, because revolutions do occur when people are poor. I mean, one of the most insightful things that I ever did was to go to Versailles and walk Versailles, and to see the lavishness of Versailles makes you understand why the French Revolution occurred. And so when things get too out of whack, that's exactly what's going to happen. You would have something that will look like a revolution. Now, I'm not saying we're going to have something like the French Revolution, but you can definitely have an economic revolution where new governance comes in and they change the tax structure that's probably been in place for the last 45 years substantially.
Yeah. So, I look at it, I'm going, okay, so we had Jeff Bezos's wedding, $50 million. We just had, we had Taylor Swift rent out Madison Square Garden, right? You see Donald Trump building a big new ballroom, and you see, everything that he's doing. And so there does seem to be some of this a lot of this lavishness going on. And I've got to believe that that's driving some of this political unrest, is just how brash the ultra wealthy are in flashing their wealth around.
Right. Right. I mean, and generally the rule with old money has always been you don't flash it. New money sometimes will flash it, but there's a reason why old money doesn't tend to flash it. You keep it quiet, keep it not as visible.
Right. Not, don't stir the pot.
Right.
Okay, well, that's interesting because again, this is all new money, right? I mean,
Yeah.
Taylor Swift, Jeff Bezos, that's all new money.
Yeah.
That's not Rockefeller money. You don't see
Right.
the Rockefeller spending like that, which is
Right.
interesting.
Well,
Do you
well,
think?
if you see the Rockefellers, what are they doing? The aspect that you see is they're talking about their charitable work.
Right.
They're donating money and they're giving back to the community.
So, how do you think that the economy today compares with the robber baron economy? Because it seems to me that it's a very similar pattern where you have, the very well off and then everybody else, and that's what we had in the early 1900s. That seems to be what we have today, and and then eventually we ended up with a world war. That's how that was resolved.
Right.
And where do you see this? How do you see this getting resolved? Or do you? I mean, it's got to at some point. It's got to resolve itself. It's in balance.
Right. I mean, we're making, there are some progress. I mean, we just the Trump accounts just went online. And that's a case where we're trying to make equity ownership amongst our youth as part of something that they're familiar with. They learn about, they can share in the dream. And then you've had people like Michael Dell who are giving a lot of money to this thing. So these are things that are helping to make sure we don't go to the extreme of the robber barons that we had. I don't think we are at that level yet, but there's some recognition that from people who have money that they need to give back. And I think one of the encouraging areas are these new Trump accounts.
Oh, interesting. Um, so one of the challenges I think that happens is you have the ultra wealthy, but typically, you take a wealth tax. Why is a wealth tax on billionaires bad? Well, it's not the wealth tax. First, well, there's reasons. First of all, anything you tax, you get less of, and so you're going to tax production, you get less production, and that is, I think, that's an easily verified fact. But on top of that, typically you start taxing the wealthy, and pretty soon it starts coming down, right? I mean, it's like we used to have. The income tax only applied to the very wealthy, didn't apply to the average person. And now we see that the average person is paying more of that. They're still not paying as much, but the upper middle income is really paying the most, really, as a percentage. Where do you see that being a danger here, where these tax the rich? It's the threshold keeps coming down because it doesn't seem like there's ever been a dollar that a politician didn't find a way to spend.
Right. I mean, when you look at what's going on in New York City, they want to tax the rich, but then now some of the ultra wealthy are moving out. In New York City, they're very dependent upon revenue from a few individuals. And as they move out, then now the mayor's got to decide, do I want to I need this revenue because I want to do X, Y, and Z. Now I have to move down and start taxing middle class people, and that is something we see. Something that I think that is kind of interesting that I often think about is just in terms of this. When I see somebody like Elon Musk or Jeff Bezos, and they form these companies, and when they go public, that gives people an opportunity, middle class Americans, and gives them the opportunity to invest in those individuals, to share in that
Right.
prosperity. So one of the things that worries me is we're seeing these companies wait longer and longer and longer before they go public.
Yes.
And it's preventing people from getting the exponential growth and sharing in that wealth. Maybe I don't have Elon Musk money, but if I make some money on Tesla stock or SpaceX stock, then I'm sharing in the dream with him. And it's a little bit easier to accept him being a trillionaire if I've made a little money along the way. So it worries me that our regulatory environment is such that businesses are finding it more advantageous to wait
Right.
longer to go public.
Well, it's interesting. SpaceX is a really interesting case in point because they're a bit of the exception where he actually held out 30% of the stock for the average person, right? For the public to buy into. So where most of them will, it stays private. He held out 30%. So do you see that as a positive sign? You think more will do that? I mean, for example, we've got OpenAI that's ready to do their
Right.
public offering. Do you see them holding some out for the public, or do you think they're going to just keep it all private keep it in the hands of the wealthy?
Well, I mean, they're going to make their shares available, and how exactly they decide to set that up is, and anybody's guess. But what I like to see is the ability that the average American who is in suburbia, they're in a small home, and they want to take a little money and put it in their 401k, or they want to put it in a brokerage account, and they can buy stocks, they can share in the prosperity. And you want to make sure that's part of the American dream.
Now,
Maybe I'm not the innovator that Elon Musk is, but I can share in what he built.
do you have any concerns that we're in the 1920s? This is what happened in the 1920s, right? We had the average person getting the stock market. I think about 2006, 2007, we had, you knew the real estate market was in trouble when you were getting a business card handed to you by the cashier at the grocery store, right? Say, hey, I buy real estate. And do you see that being a danger here where we're at we could create a bubble in the market because obviously the retail investors tend to get in late?
Right. Well, so I'll address it through the lens of, do we have an AI bubble? All right. And I was watching CNBC not too long ago, and Becky Quick summed it up best. She said, every person that I talk to that uses AI says we're not in a bubble. And that's how I feel about it. I think it's a transformative technology. It's the most transformative technology of our lifetime. So this has got the opportunity to grow the pie. So when I teach economics, I think about the economy as a pie, and AI is going to take that pie and just make it bigger. So we all can have a bigger slice of that pie.
So one of my buddies is a stock market guy, Andy Tanner, and he says that he thinks that ownership now is going to be more important than effort. Do you see that where with AI in particular, where you're going to have owning the stocks, owning the businesses is going to be, and owning the real estate, for example, it's going to be so much more important than the effort. Because over the last 20 years, we've had a lot of growth in effort type. We've seen CEOs and football coaches and a lot of people that are employees making a lot of money, okay, which we hadn't seen before, right? There wasn't that big leap in wages for the upper earners that were effort. Do you see this shift going on, like Andy suggests, that will shift from effort being less important than ownership?
Well, I mean, I think your higher income employee, for instance, your sports star, they're going to continue to make the type of money that they're making. Actors, because of AI, we'll see where that goes. That could be an exception. But I see that avenue as being important. CEOs are important because they're making the decisions that ultimately decide the profits that the shareholders are going to make. So I do see that the companies are going to continue to grow. Their profits are going to grow. You're going to want to have good leadership on those companies. And there's going to be some areas like, say, sports stars, which will continue to make good money.
So outside of owning, I think that's a really good option. Own some shares, right? Buy some shares. Don't think it has to be all about the next dollar you earn. It actually should, put some of that money away and actually own some of the shares of the future. Besides that, when you look at what a business owner can do in this economy, should they be concentrating on that upper portion of the K? in order to maximize their revenue. They certainly can't eliminate the lower portion because that's 80% of the business typically. So like an airline, I can't see American Airlines. I know that they're emphasizing their first class passengers, but they're not going to fill a plane with first class passengers, right? I mean, still 90% of their plane is going to be filled with coach passengers. So how do you, from your perspective, how does an entrepreneur go about looking at this economy and taking advantage of it?
Well, you cannot, most businesses can't jettison the low end at the bottom 80%. Just, there's too much revenue to be had there. If you take a look at a company like TJ Maxx, this is a company that's hit the low end of the market, but there's also enough high income that walks through that door. Quiet high income that's going through there. And so they found a sweet spot at how to make money with both markets by offering good value with the product that they're offering. And in a business, in their case, that's really kind of to some degree immune from competition with Amazon.
So are you seeing that there seems to be this, I mean, like my wife and I have this little restaurant we used to go to. I emphasize used to go to. They basically were a burger place, right? They had burgers and steaks and but it was a local place. They now only sell like Wagyu beef. And so like a burger's like $60 and a steak's like $100. And so we stopped going there, right? And not because we can't afford it, but because I mean I have Wagyu beef in my freezer. I'm not gonna spend $100 at a local place, right? For that. I mean, maybe if I'm in New York or something, I would splurge like that. But but then on the other hand, you have the Hermes bags at the pawn shop. So how do you deal with all of that? It seems to be like there's a paradox in the economy as to where do you go with that? Do you go towards the bargain shopping higher end people? Do you go towards do you say, well, look, we're going to throw a price out the window and just say, hey, we're going to market it and we're going to be so much better than everybody else that people aren't going to care what price they pay? Where would you go with that?
It all depends on your individual business and what's your market niche. Who are you aiming toward? You're not going to be everything to everybody. So understand your market and then aim toward that market. If you're going toward the value market, there's plenty of people there. Then aim toward that market. If you're going toward the higher income, there's less people there, but understand what your higher income consumer wants from their product.
So I think that's a really good point. I think people, and okay, so I'm going to go to that question. What do you see people wanting in that higher income level? What are you seeing in your studies? What's driving that consumer?
Yeah, they want quality of service, right? They want some people want flashy, some people don't. Again, that goes a little bit back to old money, new money. But they want a quality product. They want good service. I'm not going to too many high-end restaurants, so but just from my observations, that's what I'm seeing.
Well, if you think about what's the difference between a 5-star hotel and a 2-star hotel, it's typically not the size of the room. It's typically the quality of the service, right? So it would seem like, and let me throw this out, in any business, including say even an accounting business or a legal business, how much do you think, if you're really looking at that higher part of the K, okay, how much is the personal service? How big of an impact do you think that has on those people?
I think it's huge. Just kind of a personal story. When I was a kid, my dad was a police officer, and he projected at a local men's clothing store. And they did some high-end customers, and the high-end customers would walk in before the place opened. They would get everything fitted, tailored, and he was there to provide security. And they wanted the ability to get high quality material. They wanted to be able to shop when everything was low key, not have to they wanted some individual time. And then they opened the doors and they serviced more of your middle class client.
It's
And that's
interesting.
a business that was successful at doing that.
We're even seeing Disneyland do that, right? They now have the concierge service. Well, they'll have somebody walk you to the front of the line. You're going to get on first. You don't have to wait in line anymore. It's a lot of money, but but the reality is, if you make a lot of money, then time and money, there's a different relationship between time and money, right? So that becomes important. So it's interesting that even a place like Disneyland, which is, you think of as, well, this is the family destination, has actually addressed that market that way.
Right. The difference, of course, with Disneyland is when somebody gets in the front of the line and they get it's visible to other people. There's a lot of well-to-do off people that want the service, but they don't want it to be visible.
Interesting. I actually had that experience once. I was at an amusement park, and my friend I was with was an NBA player, and they just automatically took him to the front of the line. Right. It was the best way to go through an amusement park. Let me tell you, you can do all the rides in 2 hours. It was great. I got to say, it's hard not to love that, right? That idea, rather than waiting in the 2-hour Disneyland lines.
Yes.
Anyway, so final words. What do you think are, like when you think about 2 or 3 things that somebody, a business owner in particular, ought to be looking at in this economy? What does that come down to?
I think the thing that is probably most important is to embrace artificial intelligence. When I talk to people who aren't using artificial intelligence, the common theme is it hallucinates. And what you need to do is what using artificial intelligence is you have to learn to practice how to properly prompt it, use different LLMs, use different tools. But if you ignore it, push it aside and say, this isn't worth my time, this isn't worth my investment, you do it in your own peril, right? Whether you're you can think about, you're in a service community, a lawyer would find it very helpful, accountants, or you're going to use these services and find them very helpful. And that's a good chunk of the.
It seems to me that AI, it's really, when do you use it and where do you use it? That's where people get, I think that's where they get tripped up, because if you use it on the front end, nobody likes it on the front end. Nobody likes nobody likes calling an AI person on the phone. Nobody likes that, right? They want to you want to really make an impact on that higher part of the K. You have a real person answer the phone, right? You don't even have a message. You have a real person answer that phone. I think that's a big indication that, hey, we're a high-end service. We're personal. We're all about that. And, but on the back end, it just is so efficient. I mean, we're not that far away. We will see tax returns prepared largely with AI tools. My company is actually developing a tax strategy software using AI tools that will allow you to actually come up with your what are the best things you could do to lower your taxes. So I do think that it's a huge opportunity, and I do like your point about owning a piece, right? If you don't own your own business, particularly, your own business, you can drive that more. You have more control over that. You have a bigger say, and you typically can make more money at that. But if you don't, then own somebody else's business. And that's a lot of what I'm hearing. And the other thing I'm hearing from you is that, we do have to be aware that as the gap gets bigger, you're going to see more and more pressure to tax the rich. And that tends to come down because there's not that much money at the very ultra wealthy, and they'll leave. Okay. Where then what you end up with is the people that are kind of on the upper end of middle class shouldering the burden, so to speak. So where can we find more? This has been terrific, Ben. Thank you so much. Where can we find more about what you're doing and what you're studying?
Well, most of my stuff, my professional stuff is on monetary policy. And so that can be had through my webpage. So if you just look at Benjamin Keene, University of Oklahoma, you would come up with my information and some of the research that I've done, particularly on things like monetary policy. But, you know, one of the things that's important to me is to always think about, you know, things through a public policy perspective. And so thinking even about these issues is very important from a public policy perspective.
Well, and very important for the average person.
Yes.
With a public policy perspective. And the other thing to realize is that while it's tough to make a change at the federal level, it doesn't take a lot of voices to make a change at the local level. And particularly when you're talking about taxes, so much of the tax, all these taxes are coming at the local level because we have, you know, the stalemate basically in Washington, D.C. So they're not happening at the federal level, but they tend to be happening at the local level. So we can make an impact. And I would just put out a call for everybody who's listening or watching, just understand that understanding this macroeconomic is not just good from a macro standpoint and understanding where we're going, but also good from your personal standpoint. I thought, Ben, you make a really good point. Figure out who your customers are and attract those customers, and don't try for anybody else. Really, I think that's the biggest mistake that business owners make is they try to be too much to too many people. And they say, well, geez, you know, if I had a bigger market, blah, blah, blah. Well, okay, but do you have all of your market? And that, you know, let's get all of your market first, then you can expand your market. But until you have all of your market, let's really focus on who is your market. Own a piece, whether it's owning your own business or owning a piece of somebody else's business, make sure you do that. And when you do, you're always going to make way more money and pay way less tax. We'll see you next time on the WealthAbility Show. Thanks for listening to the WealthAbility Show. If today's episode gave you a new perspective, remember this: the tax law is not your enemy. It's a roadmap. And when you know how to follow it, you can build real, lasting wealth. If you're a business owner or investor who's tired of overpaying taxes, the WealthAbility Accelerator is your next step. You'll have the opportunity to work directly with me for 80% less than my standard rate. And I'll personally guide you through how to change your facts so that you can change your tax. Go to wealthability.com/bonus and apply today. Remember, it's not just what you make, it's what you keep.
This podcast is a presentation of Rich Dad Media Network.